This is it. This is it for the gold price. Gold bugs, man, they're sweating harder right now than me at the Knicks game yesterday. We're going to talk about the levels in the charts, but more importantly, we're talking about the 5 factors that we need to pay attention to and the signals they are giving us to estimate what is going to happen next in gold and what we should do. What should be the strategy going forward? Let's get right into it. No time to waste. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Welcome to Hot Trades of the Day. My name is Daniel Helmi, and yes, you better believe I'm wearing the same Knicks outfit. Superstition is here. I wore it yesterday. We won in overtime. I lost even more hair, but worth it if we win. I'm not taking this off until we go to the NBA championship. That game was awesomely perfect. Like, perfect and awesome alone, not good enough. Awesomely perfect. Now, what's definitely not awesomely perfect is the situation in gold. We saw what happened at the beginning of the week. I have been telling you about this for 2, 3, 4 weeks. I don't even remember how far back we go. If you miss these videos, hit the subscribe button so that doesn't happen to you again. And I said the line of demarcation is $4,500 an ounce. We break below this, confirm below it. That is when stops going to get triggered. That is when institutions going to get on the sell side if we establish ourselves below it. And look where we are. We are basically at 4,485 by the time of this recording. So we're right there. But we basically closed below it yesterday. Now, not all is lost for the gold fans. But this is a fight for survival now. So, what is the chart telling us? Well, the chart is telling us we're going to go lower. Why do I say this? We are below 4,500. We are below the 50. We doinked off it twice now. Especially what I'm looking at is, look at all these red candles. 5 out of the past 6 trading days. We have 0 buying power. Not only look at the trading at the red candles. Look at where we closed. This one is fine, right? We opened, we sold off, but then there's some buying. So we got this long tail. But look at the other 4 days. We always closed near the bottom or in the bottom fourth of the daily volatility. That means people are selling towards the end. That means there's no buying towards the end. Who buys in the end? The institutions. So that is weakness. And there's no sugarcoating it. Now, in order to understand where we go in gold, what are the highest probabilities in gold to be happening, we need to look at the 5 factors that are influencing the gold price. I talked about the first one already, which is sentiment and trend. There is no trend. If anything, the trend is down. The sentiment is negative right now. As you can see, I just showed it to you in the candles. So that is negative. But what we need for this to turn around and to have it as a contrarian indicator is we need a flush sale. We need something like this, a waterfall sell-off, especially a candle like this, where stops get triggered, people throw in the towel, everybody's out, that's it. Gold is done, and then things turn around. We're not there yet. If we establish ourselves below 4,500, I do believe we're going to get a quick flash sale of $100 again, a candle like this one right here, down to the 200, and then we'll see what's really up. I still believe we're going to undercut the 200, and we're going to try to undercut this uptrend to get a liquidity grab, which means stops get triggered, and then we we'll see where things go. Now, so sentiment is negative for gold. The dollar. Oh, the dollar. If you watch this channel, I pointed this out to you last week and even going back a month. Something is changing in the dollar. Dollar is changing direction. Now, overall, the dollar is going down. But that is long term. What we are interested right now is short term. And we need some positive short term signals to defend 4,500 in the gold price. And we're definitely not going to getting it from the dollar. As you can see, the dollar is strengthening. I'm glad that I pointed it out for you because I still do not see enough people talk about this. It's obviously closely correlated to the bond market, which we're going to talk about in a second as well. So the dollar is going up. No matter how you slice it, short term, things are looking pretty good for the dollar. Downtrend broken. We regained the 200. We regained the 50. And then you have this W bottoming formation textbook. And we broke above it. And we're confirming above it. So that means gap fill is coming. But parity is coming. Now, the interesting question is, and I cannot answer this, how far has the gold price front run a move up? Is this sell-off that we saw Friday in combination with yesterday, is that the gold market front running the move up to parity? We will have to wait and see. The next thing we need to talk about is oil. Well, I told you after we broke the downtrend, looks like oil is going to go higher. We're above the 50. That's exactly what happened. That is why I was saying, okay, you want to do a short-term oil trade that's on the short side, that's fine, but I would not recommend it. And this is where we are. Now, there's an interesting development if we look at the charts in oil that we need to pay close attention to, and that is that we're starting to form, like, I'm going to draw this in a little rudimentally like this. Let me make this red for you, and this one right here. Probably going to go like this. No, let me move it like, yeah, there you have it. Something like this. So I need to adjust this a little more. I'm just literally doing this on the fly, but what I'm trying to showing you, what's more important than where exactly, if we're like to the millimeter, God, if the Germans would hear me. I mean, a millimeter, that's like a kilometer for any other nation if you're off for the Germans. We are running into the top of an interesting triangle formation, as you can see, or as I would say, that looks pretty much like a good bull flag to me. So there's going to be a decision coming in oil, and it's going to be in the beginning of June. What are we going to do with the oil price? So that's interesting. Just keep that in mind. Something big is brewing here. And as of right now, yes, we're making lower highs. That's positive. But we're still above the 50. Only if we break the 50, things are really going to starting to change. So oil, negative. For now, we got three things working against gold. It's the sentiment, it's the dollar, it's oil. So let's look at the latest problem that came up, and that is the bond market. Here's the 30-year. Boy, that's not great. We broke above a resistance zone that goes back literally for ages. It goes back way longer than this, by the way. I'm just to show it to you. Even if we go back just to 2023, but it goes back, I think, to 2007. So, broke above it. Yes, there's some profit taking right now. More than fair if you look at the rally that we've had since March. 10-year broke off the downtrend since 2023 is confirmed. This is clearly a change in trend in the bond market. The bond markets are signaling us higher rates are coming. Now, this is going to be interesting with the new Fed chair coming in, who's clearly in Trump's camp of cut rates, cut rates, cut rates. But the market says higher rates. And we know what the market will do when it doesn't get what it wants. It's going to throw a temper tantrum. So brace for much higher volatility. But the truth of the matter is, if we look at the fundamental factors, short to midterm for gold, the big four that we have, none of them are positive for gold. So do we need to rush into gold right now? No, we don't. Not with this scenario. If you look at the gold price, if you look at the RSI, we are not extremely oversold yet. We haven't had the flush out that's going to come at some point. The probabilities of favoring the downside. Should you go short in gold? I don't know. I'm not your financial advisor. I wouldn't go short in gold because I don't fight the trends. I like to trade with the trends. It increases the probabilities that I'm right. But we need to brace ourselves for volatility that we expect it to be coming. We have the zones that are clearly defined. We stay above 4,500. The pressure is only going to increase. Right? Only going to increase. The test of the 200 seems to be imminent. But again, that is a positive for the long-term development of gold. And I still believe this weakness will be the great buying opportunity. We'll see where we end up. And it probably will be the play, and we'll talk about it in future videos, to add to gold position or gold mining positions step by step. Yes, will you get the perfect entry that way? No, you won't. That's true, right? But this is a problem for a majority of the private investors. They always think of it binary because they believe, like, I don't have this great amount of money, so I need to time the lowy low to buy and I need to time the tippy top to sell, and that almost never works out, and then they do nothing. And that is the problem. So the move will be to start to add to the gold positions, but we are in no hurry for this. Not if we look at the factors that are surrounding gold. And I know that's not what you want to hear if you're a gold fan. I get it. But I'm not here to tell you what you want to hear. I'm to tell you what I see in the markets. And what I see in the markets right now is a market that has no interest in gold. And you look at the fundamental factors, rightfully so. However, if the bond market is right, inflation is on the rise, the stagflation risk and the stagflation scenario is really starting to take shape. And who is one of the big winners in stagflation? That'll be gold. And that will also be the gold producers. Again, producers. Focus. This is the great opportunity if we get the sell-offs. It gives us a chance to get in on the producers, or the advanced developers that are, close to production will be able to get into production in this gold cycle. Remember, this is very important. And I heard this in Frankfurt when I was at Deutsche Goldmesse last weekend. You hear all these explorers telling you, well, and we're going to develop this mine and it's going to produce 200,000 ounces once it's in production. Yeah, well, when will it be in production? Well, I mean, yeah, And you look at where they stand, you say, okay, these guys are 10 years out. Where will the gold price be in 10 years? I don't know. Is the cycle still running in 10 years? I don't know. And if I don't know, I'm not going to take that risk. Because I know if I have an advanced developer that are already working on building the mines, that have all the permits, all the risks, not all the risks, but a lot of the risks have been taken off the table or have been reduced. Okay, I know these guys are going to be in production in 2 or 3 years. And I'm definitely convinced the gold bull market is still raging in 2 or 3 years. Junior producers, they're making money right now. Great, I don't have that risk. With the explorers, I have a black box. That is why I want to add and focus first on junior producers that are expanding their gold production within the next 5 years rapidly, or advanced developers that are going to go into production within the next 5 years. Maybe there are even some advanced explorers out there, and actually there are, that have good mine projects, good plans, good jurisdictions, all these things, where you can see, okay, they'll probably get into production within this cycle as well. That's what you want to focus on in the weakness. That's it for today. Talk to you tomorrow. Have a great day. Let's go, Knicks.